Today, we're going to ask the question, why does it seem like when stocks report really good news, sometimes they wind up selling off? And the corollary, sometimes stocks come out with really bad news and we see them skyrocket. So I just got done doing a media event where we were talking about this move that we're having in the market. We're starting to see the cyclical stocks, your industrial stocks, we're starting to see the financial stocks, and we're starting to see the railroads, we're starting to see the travel and leisure stocks really starting to skyrocket. In some of the stocks that led us there, the technology stocks like Zoom, CrowdStrike, Amazon are starting to level off. And a lot of people want to know, well, why is this happening? Isn't there an election coming up? Shouldn't the market be selling off in general? These are the types of companies, also economically sensitive companies, that really shouldn't be doing well in a bad environment like this, especially when we're waiting on this stimulus package to come out that the Democrats and Republicans in Washington can't seem to agree on. So, what's going on here? They asked me, why are these stocks moving up? Well, if you remember, I talked a few weeks ago on CNBC about one of the biggest risks in the market, in my view, being people being too much on the sideline, having too much in cash with the anticipation that they believe this election was going to cause volatility, stocks were going to sell off, and that they thought they were going to be smart enough to be able to time that, buy in low and sell high. Well, I could tell you after doing this for 22 years, it's never that easy. What most people don't realize is that the market is forward looking. So they're thinking about things that are going to happen 2 months, 3 months, 6 months from now, and they're pricing that in today versus being reactionary. And so while everybody was waiting on the sidelines, we've seen the market in the last few weeks rally up over 7%. So now the question is, we're only a couple of weeks away from the election. We've had this big move, especially in some of the names we never thought were going to move up, airline stocks, casino stocks. We're seeing the financials move up. What do I do now? And why is this happening? Well, it goes back to, like I said, the stock market is forward leading. Let's remember back in 2007, October of '07, the stock market peaked out, started crashing from that point. The real estate market really didn't start to feel it till about 6 to 12 months later. So what happens is the stock market is liquid, right? So you can put money into the stock market, into stocks, real estate investment trust bonds, and you could sell that at a moment's notice and turn that into cash. When you go into real estate, you obviously can't do that. You have to get a listing agent, put it on the MLS, sell it. Those things take time, at least 45, 60 days. So stocks can price in what they believe is going to happen with the economy right away. Real estate businesses, they need to wait for the data to come in before they start to make those types of decisions. So the stock market is going to be the first indicator of anything good or anything bad. So when you look at what's going on right now, the stock market is being led today, a lot of this week, by financial companies, industrial companies, and some of these travel and leisure stocks. These are the types of names that you would believe the economy would need to do well. So what's happening is a few things. Number one, there's this stimulus package that everybody's worried about. They haven't been able to get through. Our view is that stimulus package will get done soon. I think that's consensus. So the market believes it's going to be done also. So the first stimulus package helped out well. We saw new home housing starts do well. We saw retail numbers do very well. Obviously, travel and leisure didn't do well, but that's primarily because those things were shut down. But I could tell you now, we're starting to see, as casinos open back up, those numbers tick up. I just flew out to Scottsdale this past weekend. There was not one rental car that was available in the whole state from any company. So we're starting to see some movement ahead of things. And so what's happening is the stock market is pricing that in. And so even though we haven't got the stimulus, even though we're waiting on this election, we don't know who the next president of the United States is going to be, the stock market is anticipating that everything is going to be fine. They think that there is going to be a stimulus plan. They think, irrespective of whether it's Trump or Biden, that the market's going to do just fine. We're not going back to a 35% corporate tax rate. It's probably going to be 28%. But even that, is there going to be an appetite for raising taxes at all anytime soon if we don't see this economy start to pick up. And so the stock market is saying everything's going to be okay. That's being priced in, not today's topic, but the bond market is actually agreeing with them. And when you see those two things going, that's something you want to pay attention to. But so when you look at it, there's a lot of volatility out there right now. There's a lot of nervousness about who the election is going to be. There's a lot of hand wringing in terms of when is this stimulus plan going to be passed? How large is the stimulus plan going to be passed? But the market is saying everything is going to be okay. Now, let's fast forward a few weeks. Let's say we know who the next president's going to be. We get the stimulus plan passed, and now you start to see stocks sell off. Well, wait a second. Didn't we want all these things? Didn't we want this uncertainty to be taken care of? Didn't we want a stimulus plan? Hey, we just got a great stimulus plan. And the stock sold off. Well, what's going on? It's like I said, the stock market's forward looking. There's something called buy on the rumor, sell on the news. Remember that. The rumor is it's going to happen, right? The news, when it comes out and says, hey, we got a stimulus plan passed, that's when people start to sell. So you have to think about that. As an investor, the time that you need to invest, quite honestly, it's counterintuitive. It's the time when people are panicking. It's the time at the greatest uncertainty. It's the time when nobody feels like they want to be in the stock market. Times like 2009, when people feel like they're ready to throw up watching their statements every month come in down, 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 down. Those are the points in time when you want to be a good investor. You want to step in because, like they say, it's always darkest before the dawn. 100% of all stock market corrections going back to the first day the stock market opened until now have been buying opportunities. I say that because the stock market continues to go higher and higher. Stocks as a long-term asset have always done well. In the short run, thinking that you're smarter than the market, that you could outplay the market, you are going to get your feelings hurt time and time again. I've been doing this for 22 years with people who wrote the books of how to time the market. They can't time the market. If they could time the market, they wouldn't be writing books. What you need to understand is you need to buy high quality at times of uncertainty and times where everyone's dancing in the streets and things are a-okay. That's usually the time of the highest valuations, usually the time of the greatest complacency. And as a prudent investor, those are the times you look to trim your lawn. Those are the times you look and see, hey, these things have grown well at a proportion of what I wanted them to initially be. I first wanted 20% in tech stocks. Now they're 40%, and everyone's dancing in the streets. That's the time you might want to take some money off the table. It goes to the same things with earnings reports. A lot of companies report earnings on a quarterly basis. They give some guidance, and they come out and you hear, oh, these were blowout numbers. They beat top line, they beat bottom line. This percentage of their business did better than expected. This other category that analysts wanted to do did better than expected. And then you get pumped up after the market opens. The market opens the next day. You log into your brokerage account. Well, why is that stock down 4 or 5%? Because it's already been priced in, right? They already expected that category to be higher. Smart people were already, let's say it's Costco, for example, they have aerial shots of parking lots, and they saw this time versus last year, we were 90% occupied in those parking lots versus 70%. There's all these different things that people are looking at ahead and pricing that into the stock so that when they come out and report those good earnings, well, we already priced that in. The stock's up 10 or 15%. Now we're going to sell it to you. So again, you have to be an investor who invests ahead of the herd. It's the same thing, though, a lot of times with bad news. Sometimes companies come out and they report miserable earnings. They throw the kitchen sink out there and said, we missed on this metric, we missed on that metric. And oh, by the way, next quarter in our full year guidance is also being cut. Then you open up your brokerage account the next day and the stock skyrocketed. Why? Because all that news had already been priced in, right? They already expected bad things. And sometimes it's not as bad as people expected. Maybe they said they were going to lose $2.95 a share, but they only lost $2.90, and that could be a win. But if you look at the stock price prior to earnings, a lot of times those stocks that dip down in anticipation. So when they come out and report that bad news and throw it all out there, well, then they're saying, well, look, all the bad news is out there. the stock's bottomed. It's already sold off 40 or 50%. Now's the time where I'm going to step in and buy it. Again, what you want to do is be ahead of the crowd. You want to be forward thinking. So looking at a stock the day of news, on earnings, especially, or things of those metrics, and wondering why did it go up or why did it go down, that's not usually the way to do it. This is why, if you're going to invest in the stock market, I always say it's a market of stocks, not a stock market. You really want to understand the company. That's the way that you get a competitive advantage. You want to understand what they're doing. Is this something that's growing faster than its category? I was just on talking to TD Ameritrade about a company I've talked about on here before called Farfetch, a company that's revolutionizing the luxury brand industry. That's a $300 billion industry. Only 12% of sales are online. That's going to move to about 25% in the next 4 years. They're dominating that category. Nobody talks about that company. Not a company you should necessarily go out and buy. Do your homework on it. But this is an example of understanding the company, understanding what's going on. And when you understand the company, if somebody else doesn't get the story right or somebody else panics, then you understand this is an opportunity. Where if you're just buying things willy-nilly, you don't understand what you own, you haven't done the research, you're going to be a victim to that herd mentality. You're going to buy when everyone else is buying, you're going to sell when everyone else is selling. That means you're going to buy high and sell low all day long, and that's a recipe for disaster. So when you think about the news and why is the stock up or down when I thought it should be the opposite, you might start thinking a little bit differently now to remember the stock market is forward looking. So the news that we're expecting a month, 2 months from now, people are going to start pricing that in today. And that's why you have to have an opinion, an educated opinion as an investor. Otherwise, you're going to get run over. That's Wealth Talk for this week. Have a great weekend. We'll see you next week.